I think it kind of highlights like the different psychology of ETF buyers versus crypto natives, where a lot of crypto natives are, you know, a whole portfolio crypto and leveraged. And so when there's a drawdown, they have to delever and they get liquidated, and they don't want to be selling, but they become forced sellers. And you know, when a dip happens, rather than being able to buy the dip, they have to sell and make the dip worse, as opposed to, a boomer with a little bit of Bitcoin in their portfolio. Maybe they've got 1%, maybe it's 5%, and a dip happens. They're not put into a position where they have to be forced sellers. Instead, they see it as a buy the dip opportunity, and maybe they increase their portfolio allocation a little bit. From maybe it's from 5% to 6%, but here they are buying the dip. So I think that's kind of what is playing out in these two lines, and I think it speaks exactly as you said to, like, there's a new cohort here. It's really TradFi capital, and maybe that manifests as, maybe at the end of the day that is boomer portfolios that have a tiny percent allocation to Bitcoin as an asset class that you should own, but they trade in a different way, they behave in a different way, and they're happy to buy blood in the streets.